It's one of our biggest positions, Martin. We on the 5th of August, you might recall I was on the program around that time, and after scaling back Japanese equity and our equity exposure overall quite dramatically in the first 2 weeks of July, we actually used that episode where Japanese equities fell by 26% in 3 days to buy Japanese equities and scale the position back up. Mm-hmm. And we've taken it up to 20% of the portfolio. Overall, year to date, during that phase as well, we also bought the dollar yen as well, which was also clearly a good decision. And in addition, our Japanese equity sub-portfolios outperformed the Nikkei by 8%, so it's up about 28% year to date.
Wow, okay, so Japan now makes up a fifth of your portfolio. That plus buying dollar yen, how long are both things going to hold true for next year? I guess this is a roundabout way of asking, what do you expect to happen with the Bank of Japan?
Yeah, well, I think the more important question with regard to the yen is what happens to the US dollar. And the consensus trade and consensus belief at the moment is very much long US dollars and an expectation of high US Treasury yields and a higher path of rates. Yeah. So I think that matters a lot more. What's really interesting is, despite that very strong performance of our Japanese equity basket year to date and the market overall, is that basket still trades on under 10 times earnings. It's massively net cash on balance sheet, and we would actually take the non-consensus position that if there is a better outcome for global growth, then Japanese equities are actually well positioned. So we actually prefer the big exporters as opposed to the domestic exposure.
Interesting, Lynn.
Yeah, Nick, I guess picking up on that then, what do you make of some of the concerns, the headwinds in terms of Japanese stocks, particularly as well in terms of the tepid growth we're seeing in China as well, and then what I was just talking about in terms of how the Prime Minister is going to be able to navigate the US and tariffs, that even if it wasn't imposed directly on Japan and we got tariffs on China, for example, big tariffs, as has been suggested, that could have a big flow-on impact then into Japanese corporates.
Yeah, our sense is that is the consensus belief for the prevailing bias. So it is very much well priced, especially both in the dollar and the yen and a lot of Japanese equity exposure. So as I mentioned, despite the market being up 20%, now basket being up 28%, that exposure is still under 10 times earnings. And if that bearish position is very, very well priced, then the opposite would be a very strong outcome.
Nick, listen, I'm not sure whether I'm going to get you into trouble with compliance or not, but you mentioned you like the big Japanese exporters, right? Does that include the auto names?
We don't have a lot of exposure to those. We look at it less on a stock by stock basis and more looking for the characteristics of the portfolio. So as I mentioned, our basket of equities on under 10 times earnings, massively net cash. That is true of the Japanese market more broadly. Ironically, the surplus in Japan is in the corporate sector. It's clearly not the government. So that's actually the strong exposure. But Japanese equity specialists hate it when I say this, but the dollar yen does really matter for the performance of the market, and that is, to be fair, that is the one question mark I have. We've been very much, we've had a very strong dollar bias within our portfolio more broadly. That's the one question mark for me going into next year.